Thank you, friends, for being here. My name is Farrukh. I'm counselor at Pakistan Mission here in New York City. Just arrived, so I don't know whether this was the actual audience which has been here for all this time. But notwithstanding, depending on that finance discussion is now taking place, perhaps that is usually the audience when we come to finance. So I'm not terribly disappointed.
No, this is just the remnants.
Oh, remnants. No, I'm sure there must have been more interest in this. We have a great panel with us, I think, when it comes to financing the Nexus. I only have one observation to make, that water, food, climate, and energy, from my perspective, there isn't any more politically difficult issue, but economically most sensible Nexus. So that's the conundrum we face together. Hopefully today's discussion with the panelists that I will now introduce, you see their names. They come from the United Nations, from capital market, and of course from the financing side. So the mix is good. Adeline is the head of responsible for investment integration at AVIVA Global Investors. And she has been presented at the UN General Assembly, at the World Economic Forum. She has been a pioneer in developing hedge fund. The role of capital markets would. Andre is the Deputy Executive Officer, Global Environment Facility. He has been undertaking, or actually has managed several large-scale projects on behalf of private corporation and subsequently at the UN. And finally, we have Mr. Walter. He is the Managing Director of Verdigris Capital, a merchant banking firm focused on companies, technologies, and projects in the area of energy, transportation, agriculture, and infrastructure. Earlier in his previous incarnation, he also served with the US Department of Energy, holding numerous positions under roughly 4 secretaries of energies. All in all, he has 30 years of private market experience in global investment, commercial banking. I will be asking each one of them to make their presentation or the remarks that they may have. Just one point that I would like to highlight here is the objective of this conversation, if I were to look at, is to identify some real practical examples that would help finance this Nexus, either in the case of instruments or strategies. And the mix that I see, I do expect that we will get that on-ground information, on-ground knowledge, and on-ground work that they have conducted, which will help us, more importantly, to add on to the declaration that is now in front of you, to present some concrete add-ons into that declaration. So, Adeline, it's your turn to look at and inform the audience. Please. I think you should come here because this is how the presentation is going to be run.
Sorry. So, thank you for your kind introduction and for inviting me to discuss how to finance the Nexus. It's a subject that is dear to me, to our organization. So over the last few days, we've been discussing, again, the Nexus issues, and we'll take a step back now, maybe not focusing specifically on the issues, but again, on the the financial market, capital markets, and how they are relevant and how we can utilize them much more in terms of solutions. I'm going to take, this is going to be kind of in three parts. First, in mapping part of the financial system, then talking about the interconnected challenges and opportunities, and finally presenting our set of recommendations that we presented at the UN on Thursday at the opening working group for the Sustainable Development Goals. So they are, it's a two-pager. I have a few of them there, and I'll pass them around later on. So AVIVA is an insurance company. It's the 6th largest insurer globally. And AVIVA Investors, the company I work for, is among the 20th largest asset managers. So we manage about $500 billion, and we invest in property, in equity, in debt, and across asset classes and regions. So as both insurers and investors, we are well accustomed, especially our mother company being an insurance company, we have a long-term view similar to what pension funds are. So over the next decades, we believe that there is significant risks, much more structural risks that are going to arise, and much probably more fundamental than the subprime, that what led to the previous crisis, but among others, of course, climate change. And we need to take these risks into account when we make investment decisions. And our role is to develop the right capabilities, trainings, models to make sure that when we take an investment decisions, these current risks, but also they're going to, we think, increase, are well considered. So I'm speaking on behalf of AVIVA as an institution, and there is, I mean, we are taking into account these factors, but unfortunately the market as a whole is probably not. So we believe that there are market failures where governments and policymakers will need to address to make sure that the system works better, and then we can capitalize on financial markets further. So we are concerned about the market structure, and there is an opportunity, to restore them. And at the moment, they are very much focused on the short term, and so it's how to adjust and realign incentives to make sure that behaviors are more, and the way it's managed is focused on the long term. And the poorly utilized is the fact that at the moment, most of the attention is, in terms of for the financing, the Nexus is focused on international aid, for instance, and we are not at all looking at what are the other opportunities in capital markets. So there is, capital markets are primary facilitators, and there should be, and this is what we will explore now. So what's the relevance of capital markets, basically? And as I just said, most of the attention has been given to government funding and international aid. In terms of example, it's for indirect investment, it's public-private partnerships, but little has been given to financial instruments, and little has been written on capital markets, equity, debt market, and how they can be harnessed. So we believe that there is much more we can do. And as an organization, we are drafting a roadmap to present what are the integrated capital market and what government should be doing, or what we could do to optimize. So first, I guess the three main recommendations are: one, we think that we can use the market to raise capital to fund government and use the debt market. There is systemic change to be addressed.
Do you want me to run your presentation?
No, I will come to it in a second. And third is the ownership mechanism. So I'll explain these three things in a minute. So thank you for this. So basically, I'm just going to present a map, which is part of the map, which is the equity market. And the reason we're doing that is to focus on the ownership of influence and how we can harness equity markets to finance sustainable development goals or part of them. So on the right-hand side, you see individuals. This is the beginning of the value chain for the financial system. This is all of us. And basically the biggest element on that map is the asset owners, the one that you see on the top. Asset owners are insurance companies, are pension funds, and they represent 35% of global AUM, 65 trillions of assets under management. So just in a brief nutshell, that's just a number, but they should be ruling Wall Street. And at the moment, this is not the case, and I come to why. But just presenting the players, then you have at the bottom retail financial advisor or an investment consultant. These advise asset owners as to where they should invest. Buy side invest on behalf of them, and then it's traded on the stock exchange. On this side, you have the sell side brokers. The sell side broker advise buy side managers and companies on both sides. And then the money flows into companies, and that's kind of not the end of the chain, but that's how the money flows. And I'm just going to go quickly. Everything is regulated by financial market authorities, civil societies, NGOs, and all of that is part of a natural environment. And these are the issues we need to address. So how can we harness equity markets? Basically, when asset manager invests money, they invest on behalf of individuals. And nowadays, the incentives are misaligned. First, there is a lack of information. Companies are not required to provide investors, or in general civil society, with environmental, social, and governance information. And if they are, it's not standardized, it's not comparable, so it's a bit messy. So this is the first thing that policymakers need to address, the lack of relevant information. And one thing to address this that we've been part of founding members is the Integrated Reporting Initiative that is happening. And just last week at the EU, it's being ruled to, as a voluntary, at the moment, concept, but we are confident that over time, companies will have to publish sustainability reports and data in an accounting format. And we are working closely with the International Accounting Standard Board to do that. So that's the first thing, the lack of information. The second thing is also in terms of structural issues at stock exchange level. Nowadays, companies that are listed are not being asked to report on what issues or responsibilities they have towards society, whether it's a mining company operating in South Africa in terms of labor rights, in terms of water scarcity, etc. So one of the initiatives we're working on is the Sustainable Stock Exchange Initiative. So we're working with most of the biggest stock exchanges, whether it's a NASDAQ, whether it's Joburg, etc., to integrate environmental, social, and governance data information into the listing rules, so that when companies become listed, they need to, deliver and provide enough information so that shareholders are aware of that. So that's the second structural issue that policymakers need to address. The third thing, which is even more structural, is the education part. I was trained as a financial analyst. I worked in various companies, from a hedge fund to a pension fund, and now an insurance company. And when in my curriculum, I've never came across, or in the CFA, except for an ethical part, sustainable case or sustainability case. It's really, it's completely disconnected. And the only reason I have this background now is because I initiated that. So I did an MBA in finance, but I went to the public policy school and I did a sustainability major as well. But if I hadn't done this myself, this would have never been offered. And nowadays, this is not offered. And my role at AVIVA is to integrate sustainability across asset classes and regions. So that means developing for every asset class, whether in debt, real estate, etc., what ESG or environmental, social, and governance means, and how to calculate it, how to model it, and then train every analyst and fund manager to actually understand at least the basics for their sectors, for their way of investment, or of their asset class. So, I mean, this is as an organization, a privilege, but unfortunately it's not the case throughout the industry. And the problem starts at the beginning with the education. So another major alignment is to make sure that whether it's policymakers and education institutes, integrate sustainability within financial curriculums. And this would help when the money flows from individuals to the end of the chain, that these sustainability issues are taken into account in the investment decision process so that we make better informed decision. Because at the moment, because in the it's not regulated to ask companies to publish for their environmental, social, governance liabilities. That's an externality that is not internalized. So if company A publish and internalize this cost, but company B doesn't, well, the investors at the moment don't have any reason to invest in a company that is more transparent, because the result is that it just looks more costly, and they will invest in company B. So sustainable behavior is not rewarded. And for this to be rewarded, governments and civil society needs to put pressure on companies to internalize these externalities. When I was working in a hedge fund in the past, we did an analysis on environmental liabilities. So we looked at 40 factors, and we decided to think about how to put a dollar price on environmental liabilities. So from CO2 to VOCs to, and you name it, lead, etc. And we got to an environmental liability for all listed companies. And we did an analysis comparing what would happen if all these liabilities were internalized by companies. And on average, we realized that any listed company would have to give back 4.5% of their market cap. In financial terms, this is huge, because in terms of, 4.5% on average means that a company may have to give back 20% of its market cap, while others 2%. But that means the whole market would be realigned. So that means there is mispricing. And this is critical. There is a lot of work to be done by policymakers so that financial analysts and financial institutions are given the means to take this into account. So that's a brief part on the challenges. But in terms of opportunities...
we have to...
Wrap it up.
Please.
Yes. So on the opportunity side, there is a lot that is happening to solve these issues. And as once, I'll talk about just two possibilities in terms of mechanisms that are opportunities. On the equity side, we are owners. So shareholders are owners of companies. We have an ownership influence. And for companies like AVIVA and others that are looking at integrating environmental, social, and governance in their investment decisions, we can ask companies to, because we are owners, we can ask them to report. We engage with them and we ask for answers. So if we are not happy with the way the governance structure is, or with the way they managed a strike, or if we think that two mining companies that are doing the same thing, one has an environmental profile that is 3 times worse than the others, we can ask for answers. And that's the ownership influence. And how we exercise this is we have a voting right. So every year companies have AGMs, and we can vote against resolutions, we can present resolutions, which is it's not activism in the sense, in the Greenpeace sense, although this is very important, but it's really a healthy mechanic, and we can harness this towards the Nexus, basically. On the debt side, I have a figure, and I'd like to see it briefly, but basically, the debt market as a whole represents 100 trillion. The IEA last June issued that to address the climate change issue, or to go towards the low carbon energy economy, we need 1 trillion a year for the next 20 years. When you think that the debt market is 100 trillion, the equity market is 50 trillion, there is no shortage of capital. But let's go back to the 100 trillion in debt market. Sovereign is most of it. Sovereign debt means countries emit debt, and that's how they finance their economy. So one of the also mechanism that we are encouraging is that, and we suggested at the UN, is to ask every government to work on raising a capital plan for sustainable development. Last year, green bonds have emerged. Green bonds are debt emitted by multilateral agencies to finance specific green projects. So it's about traceability. You emitted debt to finance a specific project that finance the Nexus, basically. So it's asking every government to raise a capital plan within their sovereign debt strategy, but to have a specific capital plan on sovereign debt towards the Nexus. And these are two, among other recommendations that we are doing. But there is a lot that can be harnessed in capital markets that is completely ignored at the moment. And we believe we can hopefully make a difference. Thank you.
Thank you. Adeline, fascinating, because I think you have raised some of the points that I would highlight for the audience before I give floor to Richard. The true value of an asset right now, and according to what Adeline has very pointed out, is not untaking or not internalizing the risk. Therefore, there is a systemic risk to the long-term systemic risk, and I think it's a very important observation, much more than what the subprime did to the markets. If a carbon asset with the, say, sovereign wealth fund or a pension fund is not going to be utilized to its optimal level, it means the discount on that price is not there, or the risk has not been calculated. This is a very important observation. But more importantly, what she has identified is that we could hit a market failure. And the structural proposals she has made along the lines of an integrated reporting initiative, which is important. Sustainability listing. Should all stock exchange create a separate stock exchange of sustainability, or they should actually translate themselves into a sustainability form? We have seen FTSE for Good initiative, which is a separate initiative. But what we need to do is to make the existing stock exchange look at sustainability in there. And then financial rules, and I think this is another important observation, that CFA, which actually does all the calculation, does not take into account sustainability at all. So people who are actually crunching numbers don't care. The governments need to look at it. They're very important observations, and I hope we will also, the question for the audience at the end of the day, which I will ask, is how the United Nations, where all this conversation is happening, can actually take advantage of these observations or other, or should it not, or should it? This is the question. Richard, the one thought that was coming to my mind was from the structural changes that we really need in the market to see that in the UN everything is on the floor, that everything needs to be picked up. So there is a mess in the UN, there is a mess in the market. Not mess, I think they are doing fairly good than the UN, but there is a need to remove that. Now, but the question for the audience is, at the national level, if you look at, majority of the Nexus examples are actually there. The ministries, the way federal governments are organized, they say Ministry for Water, Power, Energy. The Nexus is there, but we don't have that Nexus at the international level for a variety of reasons, which I will not go as of now. But we will now hear more from Volta, And hopefully, Walter can come first. And hopefully, Walter will take us.
The slides are not in that order. So
Oh, is it?
mine are at the end. So you want to, I can't really waste time.
How does this function in the first place?
No, don't use that. We got your disclaimer in there. I think you want to go for me.
No, this is Richard. Richard has just finished. And now Andre. Okay, let's hear. I think let's keep it to the order. Andre is a deputy executive director, and I'm sure his experience from the ground up or financing the projects would be helpful to us in delineating from the structural constraints to how UN can fix this.
Once again, we can witness that sometimes we're overcome by technology, where we become the victim of the technology and not so much the controller. Anyway, so I'll try to get this. I'm not sure how that works, so bear with me if it doesn't. Bon. My name is André Laperriere, as was said before. I'm the Deputy CEO at the GEF. For those that are less familiar with our organizations, we are, even though we're technically a vice presidency of the World Bank, we have our own board, so we're sort of independent on what we do. This slide, by the way, is not totally up to date, because technically now the GEF is 22 years old, so we have so far mobilized and invested in environment around $70 billion. A little more than 17,000 projects. We have 183 member states. These are the main focal areas that we have in the GEF. But precisely in the spirit of the Nexus, the way we organize our work is that we have more and more integrated programs. Sometimes we call them signature programs, but integrated defines better what it is because of the nature of things. One small example of those that I like a lot personally is a program that we have in the small island countries, which we call From Ridge to Reef, where we have a series of interventions harmonized, synchronized together, starting with the top of the mountain, and then the slopes, the forests, the plains, the riverbeds, the shores, and then the ocean, all having a link one with the other. And I think that illustrates very much the interdependence of each component of the Nexus, even beyond food, energy, and water. However, I'd like to, before I get into the substance of what I wanted to share with you, I would like just to maybe say a word about two, I'm sorry, I couldn't find the right word in English. I'm not sure if it's paradigms or paradox, but I'll say paradox because it's easier to pronounce. There's one of the main themes in this conference is that we're looking at creative ways to finance the Nexus, because that's really where we should go in terms of moving the agenda of the environment and of the global development forward. But the two realities that, for having worked in international development for too many years, I will not say how many, one thing I found is that there is more money than people think. And very often when I speak, especially in the developing world, the first word that I hear is, or the first sentence is, we need more money. And then when I look at the books, I find millions of dollars that are sitting there unused. And worse, in the case of some donors, if it stays unused for so long, it has to be sent back. So there's a lot of money that is just there but not used. So while it's good to add additional money, we should make sure that the money that is there is fully used and is well used, which is, of course, largely dependent on the local capacity to manage the projects, to design good projects, and also on a wider scale, the legal governance environment that allows these projects to have a true impact. So that's the first paradox. The second is oftentimes we hear an equation or an attempt to make an equation that in my book doesn't really exist, where when we say, well, we should invest more in environment, like in water, let's invest in water. Then you'd have other people saying no, because that will have a negative impact on our industrial development. That's where we should put our money, as if one was done at the expense of the other. Well, in reality, it's not the case. If you really think about it, the reason why we want the economy to blossom is not for the sake of the economy per se. It's because we believe that this will generate more wealth, so therefore more welfare, more happiness, as some would say, for the general population. But then when you talk of environment, and I often tell my colleagues about that, I tell them, you know, when you speak of climate change or you speak of environment, you need to change your language. Because for too many people out there, when you say invest in environment or invest in climate change, they think that you're saying invest in charity. You know, it's like going at the church when you put the money in the little box and then it goes. Probably to a good cause, but you don't really see it. I say we need to change our language because environment and the nexus being at the center of it doesn't mean charity. It means jobs. It means food security. It means security. It means prosperity. So that's what we should talk about, because that's what people understand. We can talk of how many gigatons of carbon we've mitigated last year, but for most people in the street, and I would say in some government offices, it doesn't mean anything. So while if you say if we do this, you're going to preserve X thousand jobs, or you're going to create so many, then that means something, especially to our politicians and also to the population that, of course, would like these jobs to happen. So that's my second paradox. I would like next. As you saw in my previous slide, the environment and the economy are part and parcel of the same, part of the same thing that should help our society develop, grow, and prosper. However, the tendency, especially until maybe 10 years ago, but even still today, has been development by all means, and no matter what the cost would be, as if there was no limit to what we can do. Well, there are some limits, and I'll tell you about some of them. When I was a child, there were about 3 billion of us on this planet, and that's not so long ago. Now we're around 7 billion, and when my children will be my age, or maybe a bit older, there's going to be about 10 billion people. So that means there's going to be, roughly speaking, 50% more people on the Earth than there is today, sharing the same air, the same resource, the same water, the same resources, basically, and having to prosper in that environment. Yet, when we foresee this additional pressure on the on the resources of the Earth, we can't help but thinking that unless we do something different, we're going to be in trouble. Because if you, and I'll just quote one example, and then I'll tell you a few more. Somebody mentioned earlier, or made an allusion to that in worldwide, on average, about 70% of the fresh water available goes to agriculture. In some countries, it's up to 90%. In 2050, we're going to need to produce 50% more food than what we're doing today. So if we're already using 70 to 90% of the water to produce food, and we need to double the quantity of food, we would need double the quantity of water, which we don't have. So therefore, we'll have to do something about it. That's an example of one area where we are exceeding, or we run the risk of exceeding the planet's boundaries, the planet's limits. And that's what this graph basically illustrates. Since I don't know if this works. Does this? Hello?
Just to mention, we are also crossing the limits of time.
Okay. I will be very fast. And especially since at the back you probably can't read anything on this anyway, so you'll just have to trust what I'm saying. But later you'll have access to this slide actually. What it represents is that it represents different areas pertaining to the environment. And the world's pressure on these different sectors. So for as long as we're in the green zone, we're in a zone where the Earth itself can recover from the pressure that we're putting on it. But when we exceed it, like here, for example, on biodiversity loss or on nitrogen cycle, then we are way beyond the capacity of the Earth to regenerate. So we have to change what we're doing in these areas right now, and not even counting the additional pressure that is coming because of the additional population coming up. I mentioned water. I could have mentioned many other ones. We're talking about global warming. Countries are trying to agree to limit the increase of the temperature by 2 degrees by 2020. Well, 2 degrees, many say, is already too much, because 2 degrees more means basically a world without coral, with a very negative impact, therefore, on fish reproduction. However, projections say that beyond 2050, we run the risk, unless we change things drastically, that the temperature increase will not be 2 degrees, but could reach 5, maybe 6 degrees. And just to illustrate the impact of that, last time the Earth was 5 degrees warmer than it is today. That's a couple million years ago. Weren't there, but nevertheless. So the water level in the sea was 3 to 5 meters higher than what it is today. So it doesn't mean that it would be exactly the same, but I let you imagine what would happen to New York, Beijing, DC, other big cities, coastal cities like that, if the water was to raise that much, to increase that much. Last point on the pressure is that just to meet the needs of the population that we have today that is underfed, plus the one of the 50% additional people that we're going to have to produce in this half century as much food as the humanity has produced for the last 8,000 years. Think about it. Now, because of time, I'm going to conclude on this point. I was saying in the beginning of my presentation, forgive me, Mr. Chair, I'm stretching by a couple minutes, but I'd just like to say that we can and we should actually look at different ways to invest more money in the Nexus, be it from the private sector, from public-private sector ventures as well. A number of priorities have been identified, which hopefully will be clearly reflected in the new SDGs, prioritizing the Nexus, coordinating funding from the different sources, boosting public and private sector funding, tracking progress on the must-do. That's all good stuff, but that's what we should do. Now, just my last word is how maybe we should do that. We should do that by putting in place an environment that will facilitate the arrival of this additional funding and hopefully the better use of that funding as well. It's not just saying, oh, the private sector should invest more, that they will. What we need to do is 3 things. First, we need to have the right policies in place. So we need to have the right governance, the right legal environment that would remove financial disincentives, like the subsidization of sectors harmful to the environment. Like some places we have free energy for pumping water or free water altogether. We need to implement financial stimulants for environment resilience, adaptation, such as tax breaks, concessional loans, etc. We need to have an environment that offers some predictability in terms of return on the investment. Because before you're going to invest somewhere, you should have a reasonable confidence that you're going to get X in return. And that's true in terms of money, but that's also true in terms of efforts. If you go in remote areas and you ask the villagers to contribute to building something that will contribute to the Nexus, they have to see and feel the benefit that they get by working on it and continuing to work on it to make sure that it stays sustainable. Second, you need appropriate technologies. Really, I apologize, Mr. Chair. Please be patient with me.
I am.
Thank you. Thank you very much. I heard a statistic the other day that I found pretty striking because I had the privilege to live in Africa for a number of years. 20 years ago, or 25 years ago, you know, in Africa, they use wood a lot as a main source of energy. So they make charcoal, and that's what they use for cooking and heating and others. As a result of that, there's a lot of deforestation. 25 years ago, the wood that would be imported in Dakar as charcoal for the needs, strictly speaking, of Dakar, would be cut from a radius of 20 kilometers from Dakar. Today, the wood that comes to Dakar for charcoal comes from a radius of 800 kilometers. So that gives you an idea as to how we can go beyond the Earth's limit boundaries at some point. While there are so many other ways to reduce this type of mishap, but for as long as we agree to maybe think new models, think outside of the box, and agree to new things that maybe were not as per the book before, but that work. And I'll just quote one. I was in Liberia not very long ago speaking to the Minister of Environment. They were telling me about improved cook stoves. You're probably familiar with that because they've been around for a long time, and I myself have been involved in that for many years. The idea of these cook stoves is that they allow you to use, in theory, up to 70% less wood to cook your meal than if you just use the 3 stones and the fire. They had an agreement with some organization in Germany which agreed to donate a number of German cook stoves, good quality, to Liberia with the understanding that they would be sold, and with the proceeds they could order more from Germany and so on. The problem is that these cook stoves are on the market in Monrovia for $100 each, which means that nobody can buy it. So except maybe 2 or 3 restaurants downtown, that's about it. Talking with the minister and then with other people, I bumped into a group of women that had decided, they were war widows actually, so women very much in need, but that had decided to take their destiny in their own hands. So that got together and created their own cooperative. And one of them, very observant, noticed that with clay, you could build a quite reasonable cook stove with the main difference that instead of costing $100, it costs $5. So I would much rather have 55% efficient cook stove for the entire country than having 75% efficiency in 3 restaurants. So as you can see, with little money but a little bit of creativity, you can have a big impact. And that's the message of this slide actually, is that we can do, and we have to do, if we want to progress, to grow within the Earth's capacity to absorb that, we have to find ways to do more with less. That's in essence my message. I will keep the rest in case if you have questions. So thank you very much.
Thank you, Andre. The point I have picked up from Andre is that the money is there. And that's also an important message from Adeline when she pointed out $150 trillion, which is there. And that the economy needs to change. But when I will sit there and Andre would be there and we will open the floor, I will actually ask a question to Andre myself that with all these integrations and the mandate of the GEF, are we there in financing the Nexus or not? Are we there in using the resources to the point where Andre has pointed out? I think that insight would be very useful in knowing whether financing is actually going towards that integrated approach which Andre very aptly pointed out. Walter, I've introduced you roughly about 3 times, so I will not introduce you anymore. He will speak for himself.
It's a great pleasure to be here. If Kyle is here, he can come get us back on track. Oh, we got it. F5 is always the trick, I guess. I'm sure. I'm going to go through this pretty quickly, given time. So no need to take notes. These are all going to be available, but there will be a quiz. So do pay attention. So the themes here are pretty consistent, but I'm going to try and get down to a point of measuring progress on things that are financed, where capital actually flows and not some theoretical construct of which there's a lot to be developed. But what is the core challenge with fund financing the Nexus? Even that term is going to mystify most people in the capital markets. But at the core of it, it is the tragedy of the commons. Our markets do not price the utilization of resources, as we've been hearing. With all due respect to Adam Smith and the Chicago efficient market hypothesis, they're incorrect. And markets are just not perfect. And they do particular harm in the way that we utilize resources. And that continues to get worse. So if we don't address this issue, all the financial engineering in the world becomes harder. But at the end of the day, capital markets, financial engineering, you get what you incent. Whatever you incentivize, for whatever set of reasons, either good or bad, that's typically the outcome you're going to get. On the good news category, if you look around the world, there are now many, many of these reports that are getting up to the concept of the Nexus. I look at the Nexus as essentially the grand unified theory or string theory, or bringing it all together at some point. But they're manifestations of clean energy, clean water, obviously. This report has gotten a lot of press. Food crisis down here at 8 in the United States. Our Department of Defense, in their quadrennial review, did the same thing. In the U.S., the National Security Advisor actually put the Nexus, used the word Nexus last year as the number 2 risk. So, and many countries are doing this. So there is reason for hope, in that at the senior decisional levels, recognition is there. What obviously happens when you have a crisis, it gets more and more expensive. The goal is to prevent them. Not sure how much more prevention we're going to work into the system, but all of these crises, from Enron to the debt crisis, terrorist attacks, all the things we do to the environment, all magnify the costs logarithmically, not linearly. I live in D.C., so I have to work with our political system as it is all the time. Sympathies. But the bottom here is the point, is the link. If you go back even before Nixon, and I don't have Obama on here because his would be a little different, a little more positive in my mind, but they all say the same thing. Oil is evil, resources independence, the themes are all the same. And if you look at the link, it's on the YouTube, you get the actual videos of them all saying exactly the same thing. So the point is, how do we break the gridlock and actually move on? And I think we have made some pretty good progress, more marginally, I think, with the last administration. But anyway, it's pretty funny. Watch the YouTube thing. So in the rule of 3, again, you tend to get in the capital markets what it is that you incentivize. And the capital markets are typically inhibited by people who are reasonably aggressive, very creative, can figure out how to work with the rules, and typically will walk right up to the edge and put their toes over the edge and maybe look at going someplace even further. So they have to be watched, right? I mean, the capital markets should not to be left alone. But at the end of the day, 2 things have to be done. We have to educate the policy folks more than we have. And there are a lot of good lessons learned over the last 10 to 15 years that can be incorporated. We don't have to reinvent the wheel. There's an awful lot of knowledge about what not to do and what to do, so we don't need to reinvent the wheel again. Here's, again, in the good news category, this is a picture of capital flows over the last essentially 10 years. This is from Bloomberg, New Finance, which is a superb, probably one of the best journals on finance in the capital markets around environment, sustainability, Nexus. And it's no accident, it's at Bloomberg. Bloomberg drove this into them. But here you've got trillions of dollars, billions of dollars, the assets, venture capital, PE, and public markets. And there are trends, they bump around, but the bottom line is they're increasing. The debt side has grown more than anything else, which is as it should be and appropriate. It would be nice to see more growth in the private equity venture side, but that will hopefully come. In the slightly less good category, here's a short-term picture of capital in clean tech. Now, clean tech is related to Nexus. It's not everything. But the point is, it soared up until 2011, partly because of the Stimulus Act in the U.S., and it's been dropping off for the last 2 years, which again is sort of understandable. But on the right-hand side, you can see the increase in installed solar, which is just a phenomenal message. What better world than you're getting more of what you want for less investment dollars? And that's partly because solar's gotten cheaper. There are lots of programs out there. But the point is, solar continues to go up, and it's required less private equity and less investment. If you look around the world at financial institutions that get this stuff, there's not a huge number of them. We need more. I do a fair bit of work with Goldman Sachs, and I give them a lot of credit. They're ahead of many, and they actually put their money where their mouth is in this. They mean it, and they do a good job. Here's just a picture of that they do every year for the last 3 years, just like this, financing for the Nexus, but financing for the environment. We'll convince them next year to call it the Nexus, I hope. We'll see. But anyway, here are the people that participated, some of the companies that participated. Lots of individuals participated. And there's a show of the asset classes where they came from. But the point is disclosure, requirements, metrics, and measures in the public markets and public companies is increasing because you can't hide. There's nowhere to go in the public markets anymore. I'm not going to, this is another snapshot on venture capital, purely venture capital, no debt. You can read that later. A fundamental core takeaway here is the following. Most of the governments around our world believe they're bankrupt. I don't buy that, they're not. But most of them believe they're either going to be bankrupt or they're close to. On the other hand, partly because of the financial crisis a few years ago, there is more capital on the sidelines than has ever existed on the planet. It is undeniably between 20 and 30 trillion dollars sits on the sideline looking for someplace to go. And half of that money is not only not earning anything, some of that money is actually paying money to keep it in the bank because of cross-currency exchanges and hedges and things. Not everyone comes into the U.S. Treasury market. So there's an awful lot of money with nowhere to go. They'd love to have good projects. The challenge of all this good work is to craft the space and the rules so that the governments can incentivize that private capital to flow. So, there's lots of different flavors of capital, venture capital to 30-year bonds, and 50 things in between. They're all needed, and they can all be used. And here on tools, I list just, a little smattering of the tools that we know around the world in the right circumstances can be used effectively. Loans, credit support, grants, incubators are increasingly used, cost share, guarantees, blah, blah, blah. But the one that I think gets missed by most presentations and most countries in their policy development is the power of the purchase order. It's one thing to say, all right, here's an incentive, go forth and build me a solar plant. But what's really effective is if the government says, I'll buy the electricity. So the government doing what it wants, acting as a purchaser, is very powerful. It could also be seen as a form of guarantee. But this is one that when we develop the toolkit, I would advocate everyone remember how powerful that can be. To lessons learned, this list right now I think could be about 15 pages, but I want to highlight just a couple. In 1994, the UNDP sponsored an effort to say, what are we going to do? At that point, they weren't using the word nexus. They weren't even using the word sustainable. People were still using the word environment, whatever. But the point was, how do you get the capital markets to appreciate the need for sustainability more effectively? So the UNDP started this thing. We started a committee. Bank of America, Deutsche Bank, Lloyd's, other were on it. We spent 3 years, very nice dinners in lovely places. It was a great effort, but not much came out of it, frankly. I'd do it again, but it was, it was nice castles and nice dinners, but not much came out of it. But it was early days. It was too early. Now, we wouldn't have to do that again. At that time, I'll give credit to Deutsche Bank. Deutsche Bank, we had all of the global banks in and lenders and institutions. Deutsche Bank was the only one that had actually went and wrote it into their code of credit review, and they started the take-back laws and other kinds of things back then. They were way ahead of everybody. I mean, some people caught up, clearly, but they really voted with it. The second thing here, US DOE, as many of you know from the US, it took us 7 or 8 years to get an Energy Act, Policy Act. It actually came out in 2005. The EPAct of 2005 created 532 different things to do. Two of the ones that were the most important and impactful and I think constructive were the creation of a thing called the DOE Loan Guarantee Office. The capital markets, with all due respect, I include myself, and there's a lot of lemming-like behavior, and nobody wants to finance the first of $1 billion facility. It can be very job limiting if it screws up, right? So most people don't want that kind of risk. $10 million, that's fine. But to do a $1 billion plant, there aren't a lot of people that will do it either as a syndicate or together. So a great role for national institutions is to take the risk on the first or second of a kind, then get out of the way and let the private sector take over. I happen to believe in that model. I was the first director of this operation. We inherited $6 billion on a Monday, and as of last week, it's up to $38 billion allocated. And it's a 97% success rate. The problem is, it's too high a success rate. They're too conservative. The goal was to seed deployment of things that fail at some level, call it 20%. So they've done a great job. I advocate they should take more risk. Whenever I say this in front of Congress, of course, they shut me out the door. They don't want to hear that, but it's a bit counter. And now ARRA in the U.S. was the Recovery Act. This has been the best thing for the Nexus, I think, in the history of our species, because you had 4 or 5 years of the capital markets saying, I kind of like the look of a 30-year power purchase agreement on a solar plant. I can see wind turbines turning, blah, blah, blah. I just don't really want to be the first one. So nobody wanted to move forward. The Stimulus Act, Obama and his people threw $100 billion at the renewable energy markets. There's no way to get the attention of Wall Street faster than money sitting around with nowhere to go. And it had a time fuse on it, so it was going to go away. So the capital markets learned since 1999 how to do solar, how to do wind, how to do geothermal, what renewable fuels look like. All these things that were holding everybody up are essentially now no longer a mystery. It's still new days, but it isn't the barrier that it was. So to get to the Nexus level is not going to be as hard as it was, I posit, to get to renewable energy and clean energy, which took 20 years. You know, we don't need to take that much time. So green banks and green financing are spreading up all over. We have them at all different levels now. The multilaterals, the development banks, some of the best work, particularly in the United States, because our beloved Washington is so dysfunctional, the best work is at the state level with governors. And that really is helping. I think it's analogous to Europe and somewhat in Latin America. But you know, the UK has a green bank, US has a green bank, so that's pretty good news, I think. You're not going to get this from that view back, but the link is down here. This is done by the Environmental Law Institute. I think it's the most clever way of ever demonstrating a key flaw in the markets, which is the following. The left-hand side of this two quadrants are hydrocarbons: oil, natural gas, coal. Erstwhile, they're a little black. The right-hand side are all those things we erstwhile call renewable. The size of the quarter of the circles represents the quantity of subsidy our U.S. government gives to those industries. Now, how old is the coal industry? And I mean, give me some number. Look at the size of all the subsidies, and yet the oil companies and the coal companies complain that they're going to go broke if we add 2 cents to a liter of gas. It's insane. But they have lobbyists, and those lobbyists are very, very effective, highly paid. But look at how much opportunity on the right-hand side. You know, there you've got all the renewables with nothing to show, but they have obviously got growth. So I would advocate you to go back and look at this, and you can actually print this thing off. Kids get into this if they're in high school or science, because it's a very visible way to show how unbalanced and unfair, you know, it is. I would eliminate all of the subsidies to the hydrocarbons right now and move it all into renewables. It's just because after 100 years, if you haven't got it, you know, you're never going to get it. I'm not going to spend much time on this. This is a view of tax subsidies for this, and you have to get into the details of this. But if you look around the world of all the tools we have, tax subsidies tend to be about the most blunt instrument and the least useful. You have to get into some theory of why that is, but the tax incentives are not the best. You can tell I'm a little biased. I wish Thomas Jefferson, my hero, was turning over in his grave. But this is, you know, Obama trying to put a 3-plug into a 2-plug is one of my favorites. But it's a mess. Making policy is hard, and the Nexus, obviously, in some senses, makes it even harder. One of my favorite themes here on the Nexus is urbanization and cities. This one was used for, we did a study on nuclear power and where it's going. But you know, the numbers are clear. You can argue about the percentages, but no one's going to stop a third of the future growth, or even some of the future population, from going into the cities. This I would, again, you're going to have to spend some time with it, but in trying to educate our Congress, we developed a series of tools, mainly for their staff, right? But this one tends to try and show you, depending on the kind of tool you're using, how much leverage do you get for public dollars? So the simple goal is, back to the $30 billion of private sector capital, everyone thinks they're bankrupt at the government level. You want to get for every dollar of our tax allocation as much lift from the private sector as you can. And this is a convenient way to look at the trade-offs between various tools and how you get the most lift. The most lift, by far, for the lowest cost, comes from smart regulations, consistent metrics, things that the capital markets can then say, I can plan on that. Several folks have already mentioned that, and that's the cheapest way to Okay, so wrapping up here, again, by the rule of three, you're going to get what you incentivize out of the capital markets. Interesting lessons about if we're all impatient, sometimes you want it badly, you get it badly. If we don't have the science, sometimes it's too expensive to move quickly. Sometimes we should be more patient. On the other hand, when we know what we're doing, and there are lobbyists all over the world, they tend to delay effective motion and improvement. So our species has got to figure out how to do this. I personally advocate pistols at dawn on the roof, but they don't tend to use that so much these days. If you get 80% of the population figuring it out, maybe we're at 80% of the population in Scandinavia for sure, most of Europe for sure, then you can get prevention. You can act quickly enough, but I would advocate it's too late for that. We're not going to prevent all these changes. Some of these things are going to keep going. So we're obviously, as a species on the planet, going to have to get into mitigation and adaptation and resilience. Some people say, how can you make money? Why should we lend into that? Well, I don't see this as a question at all. I see this as the nexus here, at least the way we're all kind of defining it, represents the largest change in the use of resources in the next 50 years that our planet has ever had by orders of magnitude. Everything, water, land, air, all fuels, transportation, all the stuff in between are all changing. So if you can't figure out how to use the capital markets to step in the middle of the global flux that will be hundreds of trillions of dollars, I don't know where we need to go. So I think the concept of this roundtable, financing the nexus, is obviously critical, but it's absolutely doable. I mean, it's absolutely doable. So the last point here, game theory always says, look for those golden threads. What are those things that weave through everything and touch everything with? To my mind, there's two of them here which cannot be ignored. To make progress, you have to have the right informed people, well-motivated and well-informed, number one, and you have to have sufficient capital. It's the oxygen, of the market. So if you focus on those two things, I think you get as good a bang for your buck as you can. So I will stop there, and there will be a quiz.
Thank you, Walter. Some of the points that I picked up, just to recap, were incentives, market needs rules. There is capital on the sideline, and I think Adeline also pointed that out. And amongst the tools, I found that green bank, green financing, subsidies are important instruments to finance the nexus. Now, colleagues, the floor is open. I will not take more of your time, just to ask you to pose as penetrating questions as you can to everyone. But be brief, because we would like to give chance to everyone to ask a question. You might want to introduce yourself before posing a question, but very briefly. Is there a mic around here? Somebody running with a mic? I was told that there would be. Felix, finally you come to rescue finance.
Who do you want first?
This lady in a green shirt? Yeah.
Risa Edelman, the American Council on Renewable Energy. Thank you all for your remarks. We heard from several of you that the capital is out there, it's ready to be deployed, and it's a matter of creating the right playing field and the right rules and regulations to guide the finance world. What can we as practitioners do to continue to help that process progress?
Good. And I had earlier posed a question that what can UN do? UN is doing right this moment trying to solve this problem. It would be important for us to answer this question. This gentleman over here, sir.
Frans Verhagen of the International Institute of Monetary Transformation. First of all, I want to start with what Richard was telling us about that messy room. And he concluded what you really need before you do anything, you need a vision, the larger kind of framework in which you want to operate. Now, and then he mentioned goals, targets, and indicators. Now, I think you may have forgotten maybe the most important one, and that would be values. I think values become before goals. You set goals based upon your values. Okay, that's one. Then coming back to Walter's, of creating a space for rules so that capital investment can do its work. I have proposed a new monetary system based upon a standard, on a monetary standard, not a gold standard, but a carbon standard of specific tonnage of CO2 per person. And then you would have fixed exchange rates. You would have a balance of payments with both financial and ecological debts and credits, and you would have a global central bank. I think in many ways a global central bank is not there because people have not a larger vision how that could happen. So that is that, and I fully agree with Andre when he says that you really have to live within the limits of the planet because otherwise everything goes. As regards Adeline, I would add one more circle to your beautiful slide there, and I would say carbon-based monetary system below the natural environment. So it is not only financial incentives, I think it is also the larger system that we really have to deal with.
Thank you. And just to I will give you, it might be useful to pinpoint your question to the specific presenter as well, as also the comments that you might want to make. I'll take one more question from the lady here.
Mary Gilbert, Quaker Earth Care Witness. I would like to know what is the conversation like in the finance community about planetary boundaries?
If at all.
If at all. If that's
Yes.
what it is, then we need to know that.
Right. To this end of the table, starting with Andre. Short responses because we need to take others.
Thank you very much. Planetary boundaries is certainly very high on the agenda, but we still have a lot of people to convince. So the advocacy part or the education part of this is where we are now. What makes me a little bit happier is that it's now becoming more and more one of the themes in larger forums having to do with environment, and I hope that in the coming discussion on the new SDGs, there will be sufficient discussions around that. I would like to add one point, though, on the previous question of financing and the environment that would stimulate financing. You're very right to say, and as Walter said also, I fully support that in order for the money that is there to be properly used, you need to have the right environment in place, fiscal, legal, to have your subsidies in the right place and your taxation in the right place. That's what governments should do, and we're advocating hard and working hard with them, with the Jeff, as well as other partners, in convincing them to do that. But there's another avenue as well, which is that we need, and that's what I try to say, we need to be a little bit more creative in the type of projects that we want to do, and be better at reflecting the return on the investment. I'll just quote two for a second. One is, I don't know if you're familiar with the concept of dead zones. You know, these are parts of the ocean where there's no life, basically. There was one of the big dead zones that we were dealing with was in the Black Sea, where about 40% of the Black Sea was dead. And the main reason for that was due to the pollution coming from the farming on the shores of the Black Sea, where excess fertilizers were just getting in the sea and killing everything there. After working with the farmers of different countries nearing the Black Sea, I'm very proud to report that now the average income of these farmers, because they use a fraction of the fertilizers they used before, they improved their irrigation techniques, their income has increased by threefold, and the 40% of the Dead Sea of the Black Sea that was dead is almost completely rejuvenated, almost.
Thank you.
So as you can see, there's a return on the investment, and we don't speak enough about it when we talk of environment initiatives.
Thank you. Walter?
On planetary boundaries, I'll just say ditto. I mean, it's basically the same thing. On the core structure of how do we affect trade and monetary, personally, I view, already having given a nod to the tragedy of the commons, solving that problem in my mind would give the most efficient resultant financial structure. That's a big leap. As long as you don't say cap and trade, which I think would just be a horrendously wasteful approach to the problem. Carbon tax, I think, could be worked, again, inefficient, but you're advocating a core monetary unit, so I would put back to you, why not methane rather than carbon, if you're going to pick one of the two? I think it's an interesting idea. You'll have to get Methanex to shut down production in Vancouver and some others, but it's certainly worth. There's a lot of good writing across the street down here. They're now, I'm a sort of chemist economist, schizophrenic, so I look at behaviors, and so I think of it all as behavior. It's a behavior of a molecule. It's a behavior of a person. And how do you craft an economic system that would work? I think the more visibility you get on crafting carbon or some other metric, I think it's a real reach, but I think it's worth a lot of discussion. And a real shout out to ACOR. If people don't know what ACOR is, to our challenge of creating more efficient policies and ones that steer capital to efficient outcomes. In DC, ACOR, American Council on Renewable Energy, they have over the last 5 years, 6 years, I forgot, anyways, time flies, 6 or 7 years, sorry. Okay, sorry, missed it. Time having fun. But they have a model that has proved itself very, very effective at how to gain representation, debate the outcomes, craft light, lean white papers, because all the staffers in our country are so attention deficit syndrome, forgive me, they're over-caffeinated. So if you can do it in 3 pages, they'll use it. And it's a great model for all of us when we're writing these things, I think.
Thank you. Richard, would you like to respond, or
maybe on the question of the
briefly,
values,
because we need to get questions.
Yes, I would of course agree with you that values come first, and from the values arise, what you would want to sustain and develop, and therefore also what would be your criteria to cover under your Nexus example. And we know, and we've seen also I've heard in some discussions yesterday that those views even in this community do not agree. If you look at the UN, it's even wider.
What about the Earth chart? This was started, this model strong.
Yes.
Yeah.
Yeah, I think many people are aware of this, and it's an incredible achievement, this charter. But I mean, if there had been a consensus on the content of that, the UN would probably have picked this up. Member states do not have a consensus on this issue.
We will.
And for just one very short one on this question about how to channel those trillions and trillions, or maybe $20 trillion we heard that are on the sidelines to do the right thing. I don't think that the answer is really that easy, or that the UN can fix that problem from by itself. They can contribute to it, but we've seen over the last 40 years that this has not worked. I mean, I used to work a lot on R&D, targeted R&D on technologies. You look at technology performance, has been on the overall in this community very, very disappointing. Even though there have been lots and lots of efforts, and at times spikes of a lot of financial dedication. Many different things have been tried. I don't think this would be solved at the UN level alone. It needs a coordination across.
That's precisely what I want to come on. Adeline, would you like to react to anything?
I have just 3.
Just 3.
Super quick.
Okay.
On the what can practitioners do, there's 2 things, I guess, that is really important, especially as a renewable professional agency. I just give an example. The Dodd-Frank Act, last year it was about payment abroad and the disclosure of what companies pay abroad, so that to track corruption, etc. And there was a graph in an alternative magazine, but basically showing that the AIP, which is probably petroleum lobby,
American
basically.
Petroleum Institute.
Oh, yeah, exactly.
Yeah.
They had probably over 1,000 meetings with the government, and basically maybe some investment banks, 800, that were advising these companies. And the actual probably civil society or renewable energy had maybe less than 100. So I think there is, I mean, we talked about lobby before. The civil society in general and some specific agencies that are looking at the Nexus, for instance, need to get more professional on lobbying and hire real professional lobbyists to actually be present on the scene, because the oil lobby, etc., are very, very present and will get their way. So that's one thing, professionalizing the lobby. And the second is about standardizing the defining standardized or standard as a sector, because at the moment the problem for financial analysts, for instance, is that you have many different standards, so the comparability, etc. So basically, but that's probably less maybe relevant to you. And that's just one thing. And on planetary boundaries, we don't talk about planetary boundaries, but what we do talk is about, I mean, not in these terms, but it has to be about materiality. And so it's really sector specific. So for every sector, whether it's consumer sector, oil sector, etc., what are the material issues from an environmental perspective, from a supply chain perspective, and that's definitely relevant for financial analysts, for fund managers, or for any investment that is made. So it's not thought in that context, but it's definitely relevant to the thought process. And on the UN, what can the UN do is definitely, I think, work, and we think, work with more professionals. I think sometimes it's about policymakers or even asset owners have the same issues, trustees working together, but basically as a cluster and not with the real society or real businesses, so private sector and financial sector to actually engage with them. So the Dutch system is very collaborative, and I think it's quite a good system.
Very important observation. Friends, we have 15 minutes, and I want to very structure or focus our discussion onto something that we can take away together. On the planetary boundaries, on a lighter note, I think Walter mentioned that we call them tragedy of commons. Probably you didn't get my joke here. Some of the most important observations that have been made here are structural changes, incentivizing the market, and that there is money out there. Do we all agree on this? That yes, is this the solution or the way forward to tap that money which Walter said is lying vacant or is untapped, or what Adeline pointed out, that there is $100 trillion of debt market. Countries have actually come around. Is this the solution that we are looking for, or is there a need for some catalysm, some factor for catalyzing? Let's focus our discussion so that we can take away something for the declaration that we all have to approve and Felix has to run. So, any more suggestions or something that we should take away? Yes, ma'am.
I'm Melinda Gimple from UN Foundation, and I have no voice. But I want to say that having money is fine, but most financiers look at a project. So they will take a risk on solar and wind. But who finances a city that wants to do integrated planning? And how do they do it? And what's the government's role? And what's the capital market role?
Thank you.
Are we going to comment on that? Or
Yes, ma'am.
One more?
Yes, shortly.
I'll add to the bunch. Rebecca from KTH in Stockholm. About education, I think that's a frightening point made from our first speaker, that sustainability is not part of the finance curriculum in many places. And To be honest, I think it's so I would like to hear more thoughts about how to change that, and also how can the sustainability community be a little bit more literate when it comes to the financing structures that rule the world, because I think sometimes we're fighting on the sidelines and not knowing really those structures well enough. Thank you.
But that's why we brought you in this room. So you're now in the center. Any more questions? Yes, sir.
I guess I'm wondering how you would mobilize all of this money that's floating around for those countries that have relatively weak institutions for regulation and rule of law, contract law, and so on. And the only solution that occurs to me is to link to the international financing institutions, the World Bank and regional banks, and so on, who are not here in this session. So I wonder if that's something that could be a way forward in terms of assisting those countries that, you know, are not going to have the regulatory environment.
Yes, important question. Panelist? Yes. Andre, yes, you should have very definitive answer to this.
Yes, I do, and I'm grateful for these questions, which I find very, very interesting. The point on education, I think education starts, we have to educate our politicians, we have to educate our leaders, we have to also educate our children, because they're the ones that also contribute to educate the rest of. But we have to change the way we communicate. That's one of the ways to educate people. We have to communicate in a way that will be meaningful to them. That's how we can get them to understand better why the Nexus is a priority and should be. But one thing that we didn't discuss, and that I think is very important, and it has to do with planetary boundaries in many ways, it's the global commons. I think it's nice and it's important that in each of our countries we advocate and we work with the government to convince them to invest in the Nexus, or to put in place the environment that will stimulate national investment in the Nexus. But the world is becoming a small place nowadays. So, and when we talk of global warming, it's everybody that's affected by that. Emissions, everybody's affected by that. When we dump stuff in the ocean, it will just land on somebody else's land. So it's also part of us. So what we find as donor and as a partner of many governments is that many of them need to be convinced to go beyond their own borders, to agree to work with their neighbors and to see beyond. Because otherwise, the global commons, I'm thinking of oceans in particular, it's like they don't belong to anybody. So why should I put my money in there? Because it's far away, it's not me, and the current goes the other way anyway. So that's one thing that's really at the center of global Nexus that should be really on the agenda. And I hope it will come in the discussions on the Sustainable Development Goals, but I think it should be noted somewhere in the declaration or as a result of this conference, because it's fundamental for a real global Nexus.
Walter?
3 questions. This one answer to 2 of them is Sweden. To your answer on municipal town level scale design, in this country, home of the free, the wild, brave individuals, we all do it one of a kind, very inefficient. Scandinavia tends to design more at the municipal scale, much more efficient. So I'm not sure we're going to advocate a global unified theory, and everyone has to do it exactly the same way, but in between, hopefully the perfect is not the enemy of the good. But in this country, there is some work going on at DOE now, finally, at the municipal scale town level, particularly on things like combined heat and circulatory systems and transportation. So anyway, we hope we get there. In Sweden, my company has an agreement with the Swedish government, and so we're over there quite a bit. And, you know, because the Scandinavians in general have it as a core ethic, you don't need the education there as much. You know, it's interesting when I go to parts of Asia or Latin America and other places in the U.S., some people just don't get it at all. You know, but to my mind, sometimes back to the Vikings or whatever, Scandinavia has a much higher ethical, and it already puts that into its actions. I don't know why, but anyway, kudos, because it obviously works well. So we should be asking you all, how do we do the education? On the third question, I think my simple answer is, if you don't have the rule of law, it's a 900-mile problem that's almost hard or impossible to solve. If you don't have the rule of law, then you better have very honest and very well-armed policemen, and I don't think we have too many examples of that. So I'm very depressed about parts of the world where we're digressing on the rule of law, because I just don't know. If you don't have that, I don't know what you do. It's each individual, and then you get very inefficient systems. So that's my answer. The rule of law.
Any further questions, friends?
I'm happy to comment on.
Oh, you want to comment?
Yes, sorry.
Sure.
On mobilizing money to countries with weak governments, I think money has a lot of power, and these weak governments also need financing. And what we see is that mostly, for instance, asset owners, pension funds, or investment banks are attracted by these countries if there are resources, for instance. And the way it's not going to come from these countries, but it's more from the international community setting rules, like the Equator Principles when we invest in projects above a certain threshold. So it's about more the structure of the investment contracts or of the rules that manage these flows that will help these governments to want to be attractive and then work collaboratively. But of course, it's still a challenge. But there is a lot of initiative there, and I think the World Bank is doing a pretty good job working with them. On education, which is more a pet project or subject for me, first on finance courses integrating sustainability, I'm personally working with the CFA to try to integrate sustainability within the CFA, and the CFA is the core program for any financial analyst. So this is a starting block. At the moment, there is an ethical part, but there is nothing on sustainability. Sustainability is another area, but we are actively trying to engage and work with them to get that. And in some, with Cambridge University, Harvard, Oxford, these are the three. And I should say in France, these are a few large education institutions that are starting to look at it, but it's still not within the finance program itself, but there are some steps there. On sustainability, people working in learning finance, there is no easy way, and it's just about taking a financial course, taking the CFA, or trying to. But as any education, even for financial people looking at sustainability at the beginning, they're like, when I speak to someone very cynical, it's like, oh, it's CO2, investing in media, it's not relevant. And it's about changing the mindset and talking about, data privacy, what are the real issues, what are the material issues for these people, for every sector. So there is no easy way, and it's really just putting the hand in the mud, or I don't know how you say this in English, but you get the picture.
Two more questions. I'll take 3 more questions because we have to close at 3:30 and we need to conclude. And main messages, I would urge if you can contribute to the declaration as well now.
Yes, Philip Peters from GIZ. I do have I don't know to which extent we have concretely talked about now in this financing session about the whole aspect of cross-sectoral trade-offs, reducing cross-sectoral trade-offs, enhancing cross-sectoral synergies. And I find it very interesting what Adeline just said, that there's this concept of materiality in the finance world, but that it's sector-specific. So I would wonder whether that is not one good, avenue to see whether there it's not also possible to think in a more cross-sectoral perspective.
Yes, ma'am.
Thank you so much. This question is for Walter and Adeline. I was wondering to what degree there are competitive pressures within the finance industry that actually obstruct a large-scale movement also in investment. I was talking to a CEO at a large pension fund, and he said, we've tried to invest in water, we can't make money on it. I then spoke to Calvert, and they said, sure, you can make money on it, but you have to know how. And that raises the question in my mind, well, what is the incentive for Calvert to share its investment strategy, and therefore, from a larger structural perspective, to actually move that money, more broadly? Thank you.
Good, very punchy question. Any further? If not, I'll take the last question from the gentleman. No? Okay.
And this is basically an addition to the takeaway that you put out a minute ago. And you can put it in your takeaway, or you can put a new one there. And the new one would be, or the addition, whatever you want, is that we, the community here in our declaration, we demand, not simply ask, but we demand that governments set up the proper international space, fiscally, financially, monetary, so that capital can flow, that the trillions can flow. I suppose when they hear this trillions can flow, if we do our business, maybe they may listen.
Thank you. I guess we've come back to the panelists to react to the two questions there. Walter, there was a pointed question to you.
So not to pick on Sweden, but I have Sweden as a third answer. Sweden has an ambassadress to the oceans, Lisa Svensson, I think is the name. But what an example of translating morals and ethics and values into action. As a country, they have created an ambassador's position and fund her to go around, not to protect it for Sweden, but to look at protecting the oceans writ large. So I think if we had a little more of that behavior, we'd probably, move along. On to the Calvert. Well, boy, we could spend a couple years defining the mix between capital markets and communism and whatever, but my simple answer is the following. In our current structure, Calvert is a good, maybe one of the best examples of a private sector firm who's decided to focus on sustainability, and they have a first mover advantage because they're doing that on their own volition. You can't keep secrets forever. People come and go, so the information will leak out. They don't have anything other than first mover advantage. They're known for it. Their people appreciate it. They scale their salaries and their investments to this area, and they're doing as well as many of them. So there are probably 30 of those around the world. We need 300, 3,000. But I'm not sure there's a fix for that. It's a conundrum that if you're going to use a democratic capital market system, market-based system, I don't know how to fix it, but it won't last forever. Because there are clearly others, and every month we go along now, it's changing. For example, one of the great things for the Nexus is we sit here right now, San Francisco is concluding their clean tech conference, which is really 3 of these around the U.S. now every year that really have critical mass. In the last 2 years, all of them have added agri-tech or clean tech or sustainable tech to their list of topics, markets, and focus. And I think ACOR is thinking about it. I don't know if they've done it yet, but so that's a really impressive rate of uptake, is that now sustainable agriculture is also in Calvert. So anyway, I don't know if that's a full answer, but that's the only one.
Adeline?
I'll try to answer so on cross-sectoral trade-offs, I would definitely encourage anyone to think, just to be more pragmatic, to follow the thought process towards. So if we start about agriculture or water, what is the consequence for each sector? What are the sectors that are relevant? And that would definitely help. I'm not sure if that answered the question, but in terms of redirecting them, if there are trade-offs between sectors, so if we want to divest from certain sectors to invest in others, if that's also the question, then it depends of what kind of investors it is. So 80% of the investors are what we call, they need to follow a benchmark. So what is the S&P or whatever, and that reflects the economy. Usually it's 20% oil, 20% finance, etc. And so in your portfolio you still need to have 18 to 22% banks, 18 to 22% oil, etc. So of energy. So that it's within a sector the trade-off. But if the structure of the market and how we invest needs to reflect the economy, then it's more structural at sector level. So it's a lot at sector level, I would say, in terms of thought process. In terms of, for the water question, in terms of pension funds, I think the main challenge, there is no secret. Everybody does the same thing, and I think people are quite transparent and collaborative. What you're going to keep from each other is more clients and proprietary intellectual models. But other than that, you know, we all have the same information and wants to invest in similar ways, and it's a community as well. So I think it's quite transparent. The main challenge investing in water or renewable or this kind of biomass is liquidity. The size of the companies or of the projects are very small, and a pension fund is very big. So basically, if it's a 300 billion pension fund, or there's even a billion pension fund, and the project is 10 million, 10 million for any project, for any small company is huge. For them, it's 0.00 whatever 1, and they would hold 100% of that company. They don't like that. They like to encourage a company and hold 10% of it. But 10% is too much effort for them. It's going to cost a lot of money to invest $1 million in that company. So the problem is the scale and liquidity. And so one way to impact investing has the same challenge at the moment. I mean, there are a lot of fantastic ideas at the moment in terms of impact investing, which is the new thing. But the challenge is how to get the money flowing. And the flow doesn't happen because of liquidity mostly. And the way to go around it is sometimes to bundle. So to combine different projects so that it's liquid enough, and that help pension funds to consider it.
Andre?
I would just like to add a couple of things. One, somebody said, what can we do to get the governments to move that money that is just sitting there? I think I would not phrase the question that way, because I don't think there's a consensus bad will from governments to retain their money. If the money doesn't flow, it's because the conditions on the recipient side are not there. So that's why working with the governments, the beneficiary governments, on putting in place the right environment, the rule of law, and proper fiscal measures is necessary. But there's another thing that's necessary also, and that's an answer to your question. My experience with weaker countries or poorer countries is that they have a limited number of people with a very high education level, so to speak. For example, they may say, well, we don't have enough engineers. Then because they are very poor, and maybe they don't have so many universities, or the quality is not that much, they can only afford to send a few of their citizens maybe to London or to some other place to study and come back. But unfortunately, when they come back, these engineers, they don't go back to the field. They go to the government in some ministry somewhere. And so there's a disconnect between the higher part of the government and the work in the field. So that's why we in the GEF, what we do is that the education we do is applied education. We work directly, we work with the governments, of course, to get their agreement and to help them do planning in terms of land management. But then we work with the farmers to give them new irrigation techniques, or how to better use fertilizers, or how to manage the coastal setup in a better way, to manage their fish stocks in a better way. So that's much more of a practical type of education, and that's one that does bear a lot of benefits, I would say. Second point I wanted to add is the risk with this as to how can we invest more in the poorer countries is that sometimes some donors, let's say, or some governments or some people tend to politicize a little bit environment considerations. So the choice becomes not, we're not going to give to this country because it's very poor, but it's because it's in our economic interest. So while just beside there's another one that's 10 times poorer, but that's regarded as less important for reasons other than environment and the like. So we need to find a way to depoliticize questions having to do with environment as much as possible. That's my second point. The third one is has to do with the question that was raised by this person from Stockholm. A lot of the work that we do is done at the field level, as I mentioned, but we also work with mayors or regional representatives or local representatives. Just not long ago in the GF, we had a visit of a delegation of about 30 mayors coming from China. now where the group is expanded to 45 cities that have been selected by the Chinese government to take part of an experiment that we're going to do with them in association with USAID, with representatives of the private sector in America, those that have the expertise into cleaning contaminated soil. The idea is to clean these contaminated soil and return them to agriculture. So what we're trying to organize now is a next conference in China that's going to involve a group of American investors or people, private sector people, with private sector people in China talking together as to which technique to use and how best decontaminate this land to return it to agriculture. So it's a technical exchange that's also part of education, and that generates money for everybody. It costs also, but the long-term benefits are there as well. So that's what I meant to say. So there is work being done with the cities as well, and that's also part of the education, I would say.
Thank you, thank you, thank you all. I had actually planned that I would give 30 seconds each to the panelists to make their last pitch about what is the most important element that they believe is this conference or that should look like. Or if you feel that you have actually said everything, I can simply go on summing it up.
I would just re-underline.
30 seconds.
I would just, I'll take 10. I would just re-underline the importance of putting attention to the global commons.
Okay, global commons.
That's
Walter.
One thing we need to remember.
Right, it's not my top point. So I'll go to, don't let the perfect be the enemy of the good. This is going to be granular, and let's explore letting it grow up from the bottom up as well as top down. With all due respect to the UN and all these wonderful global institutions, the person on the village green can get as much done sometimes as the UN. But this effort's great, and it just keeps spreading the word.
Yeah, we talk very much about financing the components of the Nexus, energy, climate, land, and so on. We have not really talked about financing a Nexus project, for example, which would take care of what we heard just a few minutes ago, the trade-offs. I think there should be something in that because there's special support needed for making this happen, because the business and everything else is structured differently.
Adeline?
I would say embrace finance, basically. It's everybody that work in this industry is curious, follow the news, follow what's happening, are passionate people, and it's about reconciling both worlds and realigning incentives.
Thank you. Friends, I'll just take one last minute. Felix, I hope I'm not abusing the time, but I think this has been a fascinating conversation, at least to me personally. I hope to everyone else as well. The few takeaways that I find for your declaration are very clear to me. That the first is that Nexus, as the concept stand, is not being financed as yet. But there is a tremendous potential that exists if we choose to go down this road. Markets offer one very strong way of moving forward. But that's one strong way. But in order to use the markets, we need to bring structural changes, which Adeline pointed out. We need to create rules that will incentivize the movement of capital. We will need to remove the mess in the UN, as Richard pointed it out, and perhaps very bluntly so. And we need to look at the planetary boundaries and the system. And more importantly, actually, the point which I take away from Andre's presentation was that we need to change economics. We need to internalize the cost as part of our calculation if we really want to believe that we can fix the mess that we are in. It's not necessarily the UN mess, but more so. On the, I think broadly there are, from the market side, I did hear a lot of proposals on structural changes and on bringing the rules. Unfortunately, perhaps the government side was not very well represented except me, who could not have taken the floor, although I was on the floor. But yes, new ideas are there. The green banks, green financing, and subsidies were also identified as an instrument that can be used to finance. This is all I have to say. I hope this conversation was useful to you, as it was perhaps useful to me. Thank you, Felix, and thank you, Adeline, Richard, Walter, Andre, for a good comprehensive discussion, and hope we will take away something from this. Bye-bye. Thank you.